Hi, I'm Luke Antal, co-founder and chief community officer here at Alumni Ventures. In this episode of VC 101, we discuss the role venture capital can play in your portfolio's diversification. There's an old adage, never put all your eggs in one basket. This is especially true when it comes to investments for your portfolio. But portfolio diversification goes well beyond having a mix of stocks, bonds, and cash. Venture capital is an asset class that can play an important role in your financial strategy, but many seasoned investors are still missing this piece of their portfolio. VC can be a good tool for diversification against public market volatility, and we think it's something a sophisticated investor should consider. To learn more, I invite you to watch this video featuring our Chief Investment Officer and a panel of our managing partners.
I think venture capital is something that most accredited investors should think about in a modern diversified portfolio today.
Most folks have a portfolio that is stocks and bonds and maybe cash and some combination like that. A lot of folks have a little too much exposure, say, to public markets.
Really super important for diversification to have something that's different than the public markets. Public markets can be very volatile and reactionary. And venture capital investments, they mature over time.
Venture capital works a little differently. It has a negative correlation at times with the public markets.
Think about it as being a complement to your core portfolio that might be, heavily skewed toward public equities.
Professional money managers, endowments, pension funds, institutions, they usually have a whole range of asset classes they're invested in, 8 or 9 different ones, with venture capital actually being the largest allocation for so many.
It historically has had fantastic returns.
3-year, 5-year, 10, 15, 20-year returns. When you look at metrics, investment performance has been fantastic.
But you have to think about it the right way. Venture capital is an asset class that requires a long-term perspective. Our approach is to try and make venture capital simple to use, simple to acquire, and really just thinking of it as another tool in your portfolio.
The name of the game is diversification.
Diversification as an investor is important, period. It's really important when it comes to venture capital because of the risk reward of this asset class. So our approach is really oriented about diversification. Our typical portfolio has 20 to 30 companies in it. They vary by sector, by stage, geography. It's just really an important tool to have a smart venture capital portfolio.